Hey traders, Justin Bennett here with Daily Price Action. And in today's video, I want to talk about the head and shoulders pattern. All right, now this is a reversal pattern that typically occurs after an extended move up. So we're looking at the Euro CAD chart here. And what's very noticeable, first and foremost, is that we have a trend line here that is represented by these lows. And this trend line is called the neckline. All right, so in a head and shoulders pattern, this would be considered the neckline. Now, the first part of this pattern, you can see here that we have a strong rally up. The market then finds support here at the neckline. Okay, now this first high is shoulder number 1. Okay, so that's our first shoulder of the head and shoulders pattern. Now, the next high up here is going to be the head. All right, so this is the head of the pattern, and this is where the market makes an exhaustion move. All right, so meaning that it comes up here, can't hold on to these levels, and sells off rapidly. Now, this third high, as the market comes down and finds support again at the neckline, this third high is shoulder number 2. All right, so this right here is not a complete head and shoulders pattern yet. All right, so what we've discussed so far is not a complete pattern. The pattern isn't complete until the market breaks below the neckline. All right, so let me say that again. This is a very common misconception among traders that as soon as you have these highs right here and you have this neckline, that you have a completed head and shoulders pattern, and that's simply not true. And the reason being is that the market could actually find support here and bounce higher. We don't know that yet. All right, we don't know that until the market shows it to us. All right, until the market breaks below this level. Now, if you'll notice, as soon as it broke below this level, it sold off fairly quickly. And one thing about head and shoulders patterns is that you can actually use what's called a measured move, all right, to find an objective for this pattern. Because what a lot of people say is, okay, once the market breaks below that neckline, how do I know where to set my target? And the first thing I want to say is that you should always use price action levels first and foremost. Okay, so if we zoom out here and I just draw a horizontal level here, because we can clearly see that we have resistance, previous resistance, and previous support back here. Now, this low right here, obviously we wouldn't have known about this low back here when this broke, right? So we're not going to consider this low at this point. So what we're going to do is, if I zoom in here, the way to take a measured move excuse me, of a head and shoulders pattern is to measure from the top of the head down to the neckline. And we can see that that's about 600 pips or so. All right, so now if we take from the break of this neckline and measure 600 pips, all right, we get a level of about 1449 or so. All right, so 1449. Now, once I zoom out here, I can see that this area is really close to this price action level. Okay, it's actually about, yeah, it's about 50 or 60 pips away from that measured move. All right, so this actually would be a great target, and sure enough, this is where the market found support. All right, so let me explain that again. Here's what we want to do. You want to take a measured move from the head to the neckline. Okay, and in this case, it was 600 pips. You then want to measure from the break of the neckline. So we would then measure right from here at the neckline down to a future point in the market, 600 pips. And that's how you get your target for this head and shoulders pattern. All right, so I hope this video has helped you kind of better understand the head and shoulders pattern. It's a great reversal pattern that's often found at the top of a market, and it can really produce some explosive moves. So I hope this video has helped, guys. Take care. Good trading.